Call.
Good morning, good morning, good morning. Happy Hump Day. Thank you for joining us this morning. I hope that you are doing well. This is the ABC Financial Services Committee's monthly webinar. And this month, our focus is on business taxes, understanding your business taxes. As you know, if you are a business owner, there is a deadline coming up and there's some stuff you need to know about. And so, as the Financial Services Committee, we're here to make sure you have what you need to always end up on the positive side of things. All right. I am your esteemed chairperson of the money team, Chika Uzoka. I'm a speaker, a certified financial planner in about 5 more modules, and I'm an author of The Teen's Guide to Wealth, the #1 resource teaching youth and young adults everything they need to know about money. Thank you for joining us this morning. Tax season, we know it's not really that exciting. However, you got to do it. And so, luckily, we have some amazing professionals that are going to be able to help guide you through the, 77,000 pages of IRS stuff, right? We want to be able to just focus on our business, growing our impact, growing our income. And we can't do that without our CPAs, our tax advisors, our tax professionals, our enrolled agents, right? And so that's who we have with you for us today. Before we get going, I want to remind you that tomorrow is our annual tax empowerment event going on in the North Metro. Big shouts to the North Metro Affinity Group for partnering with us on that at ViStar Credit Union in Peachtree Corners. This is going to be up the whole time, so you cannot tell me you didn't know about our event in person tomorrow because it's right here. And so we'll be dropping the link in the chat as we go through this. So thank you for joining us again. And I am excited to introduce an amazing pair of tax professionals, right? Going first and last, we have Dr. Deshonda Lucas of Premier Taxes and Accounting. And then we got my man, Kevin Marquez of Accutax, Inc. And they're going to be dropping some gems. When I tell y'all they're going to be dropping some gems, and one of them you really need to know because that deadline, you got 2 deadlines coming up. All right. So tax deadline and the BOI stuff. And I know they're going to talk about it because we need to know it. Right. So first, I'm going to introduce and let her take over Dr. Deshonda Lucas of Premier Taxes and Accounting.
Hello, everybody. Happy Wednesday, happy hump day. Like we halfway through. But I know for Kevin, Marquez, and myself, like we just getting started for the week because it's gonna keep running until the final tax deadline. Chike, thank you so much for allowing us the opportunity to just share our passion, share what we know with the Atlanta Black Chamber. Thank you to our fearless leader, Melvin Coleman, who's always like, what do we got? What can we give them? And I must just start off by saying this webinar is what collaboration looks like. Like it was so easy for Kevin and I to come together and say, hey, what you got? Okay, this is what I have, this is what I have. Come on, let's put it together. And you don't even know right from left as far as who's doing what, because we really just united to give the chamber our best. And I'm just really thankful for that collaboration and opportunities. And I would love to see more business owners in the chamber who do the same thing come together. So like Chike, shouts out to you for saying, let's put this together and do it together and connect one another. So great connection for me, I know. And I just hope to serve as a great connection for Kevin as well. So I'm not gonna keep you, we're gonna get started. I'm gonna share my screen here. If you have questions, put them in the chat. We're gonna have some time in the end to discuss those things. So let's get it going. And let me let Kevin introduce himself as well.
Good morning, everybody. Kevin Marquez, from Accutax Business and Financial Services. I'm a tax professional, and actually, the Atlanta Black Chamber of Commerce is one of my bigger clients that I have. So my reputation is official, and we're gonna show y'all that with the information that we're gonna provide today.
All right. All right, so I am going to share my screen to get us started. All right, are y'all seeing the correct screen? See the
Yep,
presentation? Great. All right.
yep.
So we're here to talk about financial reporting and tax compliance. You don't get tax compliance without proper financial reporting. Again, that's me, Deshaunda Lucas, CEO of Premier Taxes and Accounting, where we provide comprehensive financial services to business owners. And my partner in training, Mr. Kevin Marquez of Accutax. We both have introduced ourselves. So let's get started by understanding the financial reporting, okay? And Chike talked about at the end about the BOI. I'm gonna follow up with that on the end of this training, okay? So the importance of financial reporting. So financial reporting is going to provide a clear picture of your business financial health. A lot of us are seeking contracts. A lot of us are, want to know how we're doing, and we don't know how we're doing because we don't have clear financial reporting. We're going to go over the different financial statements that we have for our businesses as well, and how those statements are used. They're used in a lot of business decisions, whether you're looking for loans for your business, whether you're looking for grants or funding, or you're looking to expand. Are you able to hire new individuals? And the same financial statements are the prime tool for the tax filings, okay? They're the prime tool for the tax filings. I talked to a lot of new entrepreneurs, a lot of entrepreneurs who are even seasoned, and they don't even quite know exactly what the different key financial statements are, okay? So we're gonna start with what a lot of people, I need my P&L, I need my P&L. And as far as they go, sometimes it's only about the P&L, not knowing what the P&L means, what it stands for. It stands for, at the end of that P&L, do you have a profit or do you have a loss? So it's your profit and loss statement. That statement is going to show all of your revenue. Your revenue is money coming in. It's going to show all of your expenses. That expense is money going out, which is going to give you your net profit, which is going to give you your net, which will show you if you have a profit or a loss for your business. So this same profit and loss statement is what your tax preparer uses to complete your tax returns. So there are a lot of business owners who don't have their tax returns done and have not done them for several years because they don't have good profit and loss statements. And the profit and loss statement is a statement based over a period of time. So when we talk about tax filings for businesses that are on the regular fiscal year, that fiscal year is from January to December. Now, some businesses pick a different year, and everything, but most business owners use the January to December. So when you're looking at your profit and loss for your tax return, you're looking at it for a particular year. Right now, in 2025, we're filing the 2024 tax return, which is based off your 2024 profit and loss statement. So the initial question is your profit and loss statement together? If it's together, let's get a yes in the chat. If we need some support, take that little hand up and say, "Hi, I need a little support," okay? But that's what we're here for, and that's what the chamber's here for, and that's what the different accountants, and we've had accountants and tax professionals come on like Tuesday Talks every week, a different one. I tell people all the time, it doesn't have to be me, but make sure it's someone, okay? And the next statement we're looking at is the balance sheet. The balance sheet has your assets, what do I own, and my liabilities, what do I owe? The difference in those things is the equity, okay? So this is where you're gonna see your bank statements at. A lot of individuals, like you have your bank accounts, you have your different bank accounts. Sometimes you have accounts receivables, where people owe you money, you want to know, hey, what do I have coming into those bank accounts? And then on the liability side, what do I owe? What do I owe? Based on COVID, some of us, quite a few businesses have EIDL loans, credit card balances, right? The different loans with different companies, that's where you're gonna see that at, okay? And the difference is that equity, okay? So for my C corporations or even S corporations who have major assets or they're getting in a certain amount of revenue, this balance sheet also goes on the tax return, okay? And then our cash flow statement, that's gonna track the inflow and outflow of money. Hey, what is generating most of my income? Where is most of my income going? Where's that cash going? And then the statement of retained earnings, it's just a change in equity. And your equity is over time, I've received this much and I've spent out another amount. So where the profit and loss was for 1 year or one period, that retained earnings, that's gonna show what have I been able to retain over time. And then we have some nonprofits. Nonprofits, your statement is not called the profit and loss statement. It's a statement of activity. It's not called the balance sheet. It's the statement of financial position. But it really is still gonna give you pretty much the same information. And payroll reporting. I hear a lot of business owners, they say, well, I gotta do my payroll for my employees. Do you really have employees or do you have independent contractors? Because those are two different things. For an employee, that means you tell them what to do, when to do, how to do, and everything. And you take responsibility over the job that they're doing, ultimate responsibility of that job. You pay them a certain amount, but you also take out taxes. And you're responsible for paying payroll taxes, all right? And these things have to be tracked. This payroll, sales, salaries, and wages, this will also be on your profit and loss statement. Versus an independent contractor. Now, a lot of us are independent contractors on government contracts, or we have independent contractors who work for us. You tell them what to do, but they get to decide how they're gonna do it. And pretty much they decide when they're gonna do it. They can pick their own schedule. And these individuals will get a 1099 at the year, okay? Whereas our employees, they will get a W-2. But all of this has to be reported a certain way. And it has to be reflective of your financial statements. So this is also a part of your tax filings, okay? There are federal requirements and there are state requirements. Now, sales tax. For our business owners who are selling product, who are selling some services that are taxable, you are supposed to be adding the sales tax on your invoices, collecting that sales tax. It is not your money. You are just a vendor collecting money for the State Department of Revenue. That is what you're doing. So if a product costs $7, so you charge, $7 tax, you're supposed to be collecting that money. And on the 20th of the following month, you have to report on the money that you collected in sales tax. This is a different type of report, a different type of tax. And then you have to make the payment, which is pass the money over. And I'm just gonna give you just the simple formula on sales tax. Is gonna be your gross sales, so how much you bought in a particular month. A lot of us have exempt organizations that we serve. So when it comes to your nonprofits, your government entities, they're not paying sales tax. So you don't collect sales tax on their sales, okay? We're gonna subtract those companies out, and then the vendor's compensation, which is a calculation in the system. The Department of Revenue says, okay, you collected $1,000 for us. 15 of those dollars is yours. Thank you for collecting. It's almost like a service fee, almost. So that is how you do sales tax. If you have not been collecting sales tax, it is not too late to start. It is not too late to start at all in collecting those sales tax. You can start today. You need to get registered with the Department of Revenue. You can reach out to myself. You can reach out to Kevin. You can reach out to your own accountant who may not know that you're doing these things, so that you can get registered to collect sales tax. We're gonna go over some bookkeeping best practices, okay? So maintain accurate and up-to-date records. Keep your files together. Have your accounting system together. Separate the business and the personal account. When you have your business and your personal expenses together, this is called commingling of funds. It is not allowed. You can be penalized by the IRS if you're ever audited, and it will cost you money. So do not commingle those funds. You should have separate bank account for your business and a separate bank account for you as an individual. You should not be spending your business funds out of your business account on your personal expenses. Transfer the money over, pay yourself. Pay yourself from the business bank account to the personal bank account. And definitely use some accounting software. A lot of my clients are on QuickBooks Online, there's Zero, and there's so many new different softwares that are coming out. I like some better than other. I'm a QuickBooks Online person myself for small business owners, but I've worked in some of the largest systems ever, just because of my background in auditing like large agencies and governments and all of that. And then let's perform some regular reconciliations and financial reviews. So oftentimes when newer businesses, come to me, they may be a smaller entity and it may not be affordable to have a monthly reconciliation done. And I'll tell them, you don't have to do monthly, but at least do something. So I may say, okay, let's just get you on a quarterly reconciliation plan so that when it's time to prepare your taxes, you're ready and you can have a quarterly viewpoint on where you stand financially. So Kevin, let me just pause right here and ask you, what has been your experience with the business owners and just best practices of what they need?
Most in my recent experience, most business owners been needing help with bookkeeping because the
Mhm.
bookkeeping been the main obstacle that's been stopping them from doing a lot of the things that they need to do, or even seeing the financial position or the financial health of their businesses. So that's the main thing I've been saying lately is bookkeeping.
Okay.
And I normally see it around this time when it's time to file taxes. This stuff is just
Yes.
it's not in order like it needs to be. So it takes like extra time for them to get everything in order. And most of the time, the extra time, it also costs them some extra money to pay for it to get it in order.
Oh, that sounds about right. Sounds pretty much like what I have as well. And then when you get to this time of the year, it's real shaky on if you can get 2 and 3 years worth of bookkeeping done in 2 days, because it didn't take 2 days, it didn't take 2 weeks to have 2 years of activity. But today is the day that you want to get started with a plan to get yourself caught up. So now I'm going to turn it over here to Kevin as well, so he can talk about some tax compliance for business owners. All right, so Kevin, you got it.
All right, all right. The first thing we'll talk about are the entity types that you're going to be classified as when you file your taxes. For state purposes, you can be an LLC, whether a single member, a multi-member, a corporation, or a partnership. But on a federal tax level, you're only going to be viewed by the IRS as a sole proprietor, which files on the same form as a single member LLC. You could be an S corporation, a C corporation, or a nonprofit organization. Now, what we're going to go through is we're going to talk about the savings that's associated with getting LLC structured as tax as S corporations for tax purposes. And I want to go past this slide and come back. Go ahead, Deshaun, to pass this one up. All right. So first, we want to talk about understanding the taxes that applies to your business. So first of all, you have income taxes. That's federal and state taxes based on business earnings. So if you're making money, you got to pay business taxes. All right. You may also have to pay payroll taxes, which includes Social Security, Medicare, and unemployment taxes if you have employees that's being paid with W-2s. All right. Sales tax, as DeShonda just mentioned, if you're selling goods, taxable goods and services. And then you may have estimated taxes also, which is a quarterly tax payment for self-employed individuals. And that's normally for people who expect to have a tax liability of $1,000 or more. All right, you can go to the next one, Deshaun. All right. All right, tax filing requirements by business structure. All right, sole proprietors report their income on what's called Schedule C of your personal tax return. So the personal and the business tax return are combined. All right, there are some disadvantages to sole proprietorship, and that's the same thing as LLC. So I'll talk about it when I get to LLC. All right, partnership. Partnerships filed on Form 1065, and the income is passed through the partner's personal returns on Schedule K1. So when a partnership files a tax return, it's a lot like a nonprofit organization. You just filing the information to return to let the IRS know the financial activities of your business during that year. But the income is going to be taxed through the K1 schedules on the partner's return based on their percentage of ownership of the business. So if you own 50% of the business on your K1, you'll be responsible for 50% of the profit of the business or 50% of the loss, whichever way it works. But that's your percentage and how that works. And all of your income is taxed in one single tax bracket. All right. Now, next, LLC is just like sole proprietor because if you're a single member LLC and a sole proprietor is viewed as the same for tax purposes. So they both have to file on Schedule C and they have to pay an additional tax, what's called a self-employment tax. So self-employment tax is an extra 15.3% of tax that you have to pay on your income in addition to whatever tax bracket your income falls in. So just say your income is in the income you report on your return is 40,000. You're in a 12% tax bracket. With that single member LLC and that sole proprietorship, you're gonna pay 12% tax on that 40,000, and then you can also on a taxable part of the 40,000, and then you're also gonna pay an extra 15.3% on the whole 40,000. So that makes a big difference in tax liability, and I'm gonna show y'all that uh, before I finish. All right, multi-member LLCs are taxed like partnerships automatically, but they can elect to be S corporations as well. All right, even the C corporation. All right, the S corporation files Form 1120S, and the profit and losses go through the business owner's return. So it's the same thing as a partnership. It's that same Schedule K1 that's filed on the business owner's personal tax return, and it's all whatever other income you have is all added up and taxed in one bracket without that extra 15.3% in self-employment tax. And the next is a C corporation, which files on Form 1120, and a C corporation just pays corporate taxes on the income, and the shareholders pay taxes on the dividends if dividends are distributed. So that's where the double taxation comes in. But a C corporation is also a disregarded entity. So this is the form of business structure that will be totally separate from anything that you got going on the personal side of things. All right. All right, some common tax deductions and credits. Common deductions for business expenses are uh, common like office expenses, supplies, depreciation, vehicle use. And with vehicle use, that's like a detailed expense because vehicle expense, first you need to calculate, you need to keep up with your mileage, the total mileage on the vehicle for the year, and then you need to also keep track of how many miles you're using exclusively for business, and that's going to represent the percentage of all the other expenses associated with the vehicle that you can deduct. So anything with the amounts that you pay for gas, for getting repairs and maintenance, for washing the car, insurance, and the interest that you paying on a loan towards the insurance on the car, the vehicle, and everything, you can deduct all of those associated to the vehicle itself. You can deduct travel expenses and contract labor if you're paying someone to help you through a 1099, and you even can have a payroll where you pay people through W-2 also, and that can be something that you can deduct as well. And you can do the same thing if you have an LLC as well. Any business structure. This is not tied to any business structure. This all structures you can deduct this. All right. Certain tax credits, you get research and development credits, you get work opportunity credits, energy efficient credits, and healthcare credits, depending on what type of business that you're in. And it's always important to remain proper documentation to substantiate your deductions in case you get audited. You want to have proof of what you listed on your tax return, and the best proof to have is going to be your bank statements. The best thing is going to be your bank statements. All right, next. All right, IRS compliance and record keeping. All right, maintaining financial records for at least 3 years. It may be longer for some situations. Keeping receipts, invoices, payroll records, and bank statements, and understanding IRS audit triggers and how to minimize risk. And that's all information that you would have to get from somebody who's skilled in tax preparation. And another thing to stay compliant is to make sure that you are finding some reputable tax professionals, because anybody can tell you that they are tax professional and they can make big promises to you for like sizable refunds that can be unbelievable and everything. But there's certain things that you all need to look for in your tax preparer, like making sure that they have a preparer tax ID number, which is called a PTIN. Anybody who's filing taxes has to have that number because that's required by the IRS. And then try to look for somebody that's highly recommended, uh, and always do a business search to even see like if the business even exists. You can go on the Georgia Secretary of State for free and do your business search to look up that business to see if the business still exists or even if it's compliant with the state that it resides that is listed in. Because if it's not compliant with the state, it might be a business that's not doing exactly what they need to do. All right, the next thing, file. Make sure you file on time. There's multiple ways to file. You can e-file or mail. I wouldn't suggest mail because the mail moves kind of slow and it takes longer to get processed. But any tax returns you have that's over past 3 years, you can always do the current year and 2 years back. You can e-file those. But anything past those 3 years, you're gonna have to mail it. And there's other things associated with the time you file, and I'll get to that in a minute. All right, you want to try to set up some estimated tax payments if you think you're gonna have a tax liability that's over $1,000. I mean, you don't have to. Estimated tax payments are like putting money aside in an account to cover the tax liability you're gonna have at the end of the year, so you won't have to pay for it all up front. All right, and remember to try not to file late, because when you file late, you get a 5 to 25% late uh, filing and failure to file penalty added on to the uh, the tax liability that you already have. And some things to know that you probably would not know if you weren't talking to an expert. There's certain statutes that the IRS have in place, and they've had them in place for years. But recently, I've just started to see them enforce these statutes. So it's something to be on the watch out for if you're a person that likes to wait and file multiple years at a time. The first thing is called the RSAD. That's the refund statute expiration date, and that's for any refunds claimed more than 3 years after the due date of the tax return. So basically, what that means is this year we are filing 2024 tax returns. They are due on April the 15th of 2025. All right, your 2021 tax return was filed in the tax year in a calendar year 2022, and that was due on April 15th of 2022. You got until April 15th of 2025 to file that 22 tax return, that 21 tax return, because if you don't, you can be in a situation where you can get a refund, but the refund gonna be forfeited by the IRS. So I've seen it happen to people. It can be $10,000 refund. If you miss that expiration date, then your refund you're not gonna get it. You're not gonna get it at all. The next one is the ASAD, and this is for assessment, the assessment statute expiration date. All right, this is for taxes assessed more than 3 years of the due date of the return. So if you have some tax return that you didn't file, and if the IRS does not assess your tax uh, liability within 3 years uh, of that expiration date, then you can get somebody to represent you, and you may not be responsible, be on the hook for paying those taxes. And then the last one is the CSAD, the collection statute expiration date. So basically, this means that when you owe the IRS, they got 10 years. They got up to 10 years to try to get you to pay them that money. If you survive more than 10 years, then you can get representation that can get you off the hook from being liable for paying that liability as well. All right, Deshaunda, you ready?
All right, so I'll take it back over from here. We're gonna talk about some internal controls and keep this part pretty simple. Like, you gotta have checks and balances to prevent fraud. That's checks and balances with yourself, with your bank accounts, with your staff, and with your accountant, checks and balances. So the checks and balances, include, like, even in the system, your QuickBooks Online account, which is the accounting software that does automated reporting, the periodic financial reviews with your accountant, and making sure that everyone doesn't have authorization to your bank accounts. And the people who do, whether it's your accountant, is someone who is trusted and you have a way to check the activity that they are doing. Even your accounting system, there's a audit function in it that will allow you to see everybody that's been in it and what they've been doing into that particular account. I know, like, when I have clients, some of my clients, I have access to their logins. Some banks, I have access to an accountant login. So you always want to ask your bank and check with your bank, is there a way I can provide separate access for my accountant, which they can only review and run reports. They can't necessarily make any transactions. So you can limit that access. And then record keeping, Kevin was talking about just the different statutes. You're supposed to maintain your IRS records anywhere from 3 to 7 years. For audits, you want to store your receipts. And let's talk about stored receipts. Y'all, the receipts are not what they used to be. Receipts are literally on disappearing ink that you cannot see in the next year. What you want to do, if you have an accounting system, you probably have the ability to take a picture of that receipt and it goes directly to your system. It is forever attached to your transactions, okay? Forever attached. And you want to secure your tax filings properly, make sure you can put your hands on them. For my clients, I have secure portal access, which means they have a login, a password that they only know, I don't know, and they can always log in and access these statements, and they're like electronically filed in an organized manner. And then you want to have password protection on all of your electronic devices, because like even with the Apple Pay and stuff, you can pick up the phone and tap and you can pay. So you always want to make sure that your password protected. Now, tax planning. So tax planning does not just happen at the beginning of the year. It doesn't just happen at the end of the year. It doesn't happen during tax season. It doesn't happen on December 31st. It happens all year long. And you want to stay ahead of these deadlines, okay? The last minute filing, the last minute planning is very hard to do after the fact. There are certain things that we can do for the 2024 tax year, even in 2025 before the deadline, but you want to maximize on your abilities for tax planning. So when Kevin goes back to talk about the entity selection, because he's going to go back and I'm going to switch it back over to him so he can talk about the entity selection. This is a form of tax planning. Entity selection is a form of tax planning. Asset purchasing is a form of tax planning. There's so many different strategies that you can do for tax planning that you can do year round. Okay. And it's never too late. It's never too late to plan for tomorrow. Okay. It's never too late to plan for tomorrow, but it can't always be too late to pay yesterday's bill, because yesterday's bill actually has more money attached to it, okay? And utilize tax advantage accounts and structures to minimize your liabilities. Your financial statements should be reflective of your tax plan. Your documentation should be reflective of your tax plan. If you have a rental agreement between your business and yourself for your home usage, it should be reflective in your financial statements, because that is part of the tax plan. And you definitely want to engage in professional support. So one thing I want to talk about is the difference between a bookkeeper, accountant, CPA, enroll agent, tax professional. There are differences. I hear oftentimes a lot of people say, well, I need a CPA, but you really don't know what you need that person to do, or I need a bookkeeper and you need more extensive services. So bookkeeping is a day-to-day function, okay? Some business owners do their own bookkeeping. Some business owners have someone in-house, but those are day-to-day functions, okay? The accountant can come in. The accountant can come in and do day-to-day functions, but they also have trained accounting knowledge on how financial statements should be reflective, and how the necessary journal entries that may need to be made on a regular basis, they are, they have an understanding of the accrual basis versus the accounting, cash basis of accounting, but they're able to go in because they have the financial knowledge and background to pull the whole puzzle together. Whereas a CPA has done, taken, it's new now, the number of exams you have to take, but it was to take 4 exams. And these 4 exams were on the business, tax, financial, and audit. What a CPA can do that other individuals can't do is sign off on an audit and sign off on a review. Those are the things that a CPA can do. But that doesn't necessarily mean a CPA works in the area that you have a need. I have a clients who have a CPA that don't do any accounting. I have clients who have a CPA that don't do any taxes. Right now, I have a meeting coming up with a business owner who is a CPA, but doesn't necessarily understand the inventory process because it's not the area that they work in. So it's like the medical industry where you be like, okay, I need a doctor, but you're not gonna get a heart doctor to take out your kidney if that's not what they do. So you always want to, when you're looking for someone to serve you in a particular area, do they function in the area in which I have a need? And an EA, which is an IRS enrolled agent, that individual has taken certain courses with the Internal Revenue Service, and they're authorized to represent you before the Internal Revenue Service. And a CPA can do that as well. But they can pick up the phone, have a conversation, and be able to support you in the resolution of your tax issues. Like I'm an IRS EA, which means I can get authorization to contact the IRS and resolve old tax issues. And then the role of a tax advisor in planning and compliance, you want to make sure that whoever's doing your tax advising has a broad knowledge of the different possibilities to help you save and leverage your finances. And as Kevin said earlier, you want somebody who's trust, registered, recommended, and you have a good relationship with, that you can have a conversation with, that you can pick up the phone and you can talk to and you can schedule some time with. And then, so let's talk about tax resolution. This is coming up a lot, and I want everyone to pay attention to these letters that are coming in the mail from the IRS. I believe I say this on almost every training I have. The IRS, the Department of Treasury gave out a lot of money, okay? They're going to get the money back. With the leadership that we have now, this leadership is gonna put in rules in place that have never been enforced before, just like Kevin said. So representation matters. Get good representation when you are dealing with the IRS and you have a tax resolution, which means some past due balances. Okay, so Fresh Start Initiative. We see a lot of advertisements on Fresh Start Initiative, and I want you all to beware, because there are a lot of companies who will represent you with the IRS, which means be on the telephone calls and talk, but they don't necessarily do the work. So just recently, I have a gentleman, and one of our people, he is probably about 70 years old, okay? He could be my grandfather, and when I think about it, it literally brings tears to my eyes. He called me one Friday and he said, I'm looking for somebody. I got this resolution company, but they told me I need somebody to get the returns together and do the work. And I'm like, so they don't do the resolution for you? He said, they told me that they don't do the returns and send everything to the IRS. They just have the conversations. Well, I said, so how much you paid them? He said, well, I signed up to pay $8,000 and I've already paid $4,000. And I was like, wait, so what are you paying them for? He said, I don't know. They told me I had to find somebody to update the tax forms so that we can get everything together. And then he tells me he paid another company $14,000 already, and they didn't fix the issue. So you have companies who are promoting the Fresh Start Initiative, which is by all means a true program for the Internal Revenue Service, but you have people who will talk to the IRS for you and represent you, but they won't do the work that's needed, okay? And the Fresh Start Initiative is the penalty relief, is the offering compromise, is the installment agreement, or getting your account deemed as uncollectible. And all of these things are possible. So when Kevin talked about the penalties that are assessed when you file late, you can get penalty relief for those things. That's what EAs and that's what we can do. Are offering compromise. You owe $200,000 in taxes, but you really don't have the money to pay for it, and you can document that you don't. I have a client, he owed $400,000 in taxes. $400,000 in taxes, we got it down to 27,000. He paid it off. That was an offering compromise. I have a client who needed an installment agreement, which they owe, let's say, $15,000 in tax, and they want to pay $250 a month. All of these things are possible. And so the process for doing that is you have to give someone power of attorney who is authorized to get it, which is a CPA or IRS enrolled agent. And then they're able to connect with the IRS, and like I can pull down a report that can tell you exactly what you owe the IRS, what tax returns are missing, the wage and income statements needed to file those returns, and then tax liens. So when Kevin was talking earlier about the assessment date of 10 years, if you have a lien on your tax filings and that lien is beyond the 10-year period, it has expired. So I have one client, he has a lien for 2011, 14, 16, and 22. Well, that 2011 lien has expired. The lien was only a little bit over $10,000. Once the amount goes below $10,000, you can file for them to release the lien and set up an installment agreement, which means he can now sell the property. So those are different conversations you want to have with tax resolution. And then the tax deadlines. So there's a tax deadline for the S Corp and the partnership. So the original deadline day is the 15th day of the month, but because the 15th falls on a Saturday, it's the following Monday, which is the 17th, for our S Corps and our partnerships. And then the individual tax return and the C Corp is April the 15th. So let me share with you why those days are different. Those days are different because the information on the S Corp and the partnership tax return actually falls and goes on the individual return that's due in April. That is why you have to have the S Corp and partnership first, so that it can fall on the individual tax return, and then nonprofits have their own deadline. And there's a 6-month extension that you can file for any type of tax return, but you have to do it before the deadline period. Now, I'm gonna give it back over to Kevin because I don't want to miss his information regarding the entity selection. Kevin,
Yeah, you got it. You got to put it back up.
here
You
we
got to put the
go.
slide back up.
There you go. Can you see it?
No, it's not showing.
Hold on, let me do that one more time. Share. There we go.
All right, there we go, right there.
There you go.
All right, what I wanna illustrate to you all right now is the difference of what I was talking about earlier with the this self-employment tax and how the S corporation or partnership election for tax purposes is really a money saver. All right, so let's say we have a business, any business that's filing the taxes, or we could say we have 4 different businesses that's filing the taxes. They all reporting $40,000 in profit or net income for their business. All right. In the first scenario, we have the sole proprietor or the single member LLC. Could they get taxed the same way on Schedule C? All right. Or if they $40,000, they're gonna pay self-employment tax by itself of $5,652, in addition to the federal income tax of $1,937, and then the Georgia state income tax of $1,413. That's a total of $9,002 that they're gonna be paying in tax liability. All right. If this person were to be an S corporation, if you look at the S corporation, the tax liability is basically cut in half because the federal tax on the 40,000 is only $2,947, and the state tax is normally just like a what's called a network tax, and the network tax is normally like about the max like about 125, $150. So you still saving half the amount, and then with the S corporation, it works the same way as the partnership. The tax liability would be the same, but if you had more than one member in that S corporation, that $4,520 in taxes would be getting divided between the number of members in the S corporation based on the percentage of their ownership or the shares that they own in the corporation. And that's the same thing as the partnership at the bottom. It's the same tax liability. It's $4,520 because they also get paid through a K-1 statement that's filed through the individual's personal tax return. And the last one is the C corporation. You would pay the most on a C corporation because the tax bracket is the highest. So the tax for the corporation would be $10,700. But then that corporation with corporation normally has more than 100 shareholders, so that's really not a big deal if you have a big corporation because you will have more people to absorb that tax liability. And then if any other income is distributed out in dividends, they will have to pay taxes on the dividends depending on if it's ordinary or qualifying dividends.
Kevin, can I ask you a question? Who
Yes,
does
ma'am.
not need an S corp? Let's share about who does not need a S corp. A lot of business owners think they need an S corp because they have a business.
All
For
right.
yes,
All right. So if you're in the beginning stages of your business and you're not really generating any revenue, it wouldn't help you at that point. It's advised to get an S corp when you start reporting 40,000 or more. That's why I put 40,000 as the example. And of course, the more you make, the more that's gonna save you. So that's another thing. All right. Another person who wouldn't want to get an S corp if uh if you don't want to put yourself on payroll, because that's one of the stipulations of having an S corporation, you have to put yourself on payroll and pay yourself a reasonable salary. If you don't want to go through all that, then S corporation wouldn't be good for you. But when you paying yourself on salary through an S corporation through a W-2, you actually just spreading out that tax liability. So with that W-2, you'll be having taxes deducted from your income to cover part of the tax liability, and the other part will be covered on that K-1 statement. And also too, anybody who's a real estate investor, if you're investing in real estate and that's how you make your money, real estate investment income is already passive income, and that's all the S corporation tax classification does. It gets your active income treated as passive income for tax purposes. That's why you pay less.
okay. And I'm gonna share one example that I used of, and I was sharing this with Kevin last night. So I was a single parent and I knew that the FAFSA and government would use my income for my daughter's college experience. So I did proper tax planning years ahead, and when I did my company, it was a C corp. And it was a C corp because the income from my company was not going to be attached to my personal income. So when she was awarded scholarships and everything, based on income, she actually had a greater need. And so when we talk about, well, these rich people, they don't pay taxes, they don't do this, they don't do that, they know the rules. So it's important for you to get with someone who knows the rules so that you can save in what area you can. It may not be in tax planning, it may be in college expenses, but make sure you talk to someone and make sure your structure is appropriate, not only for your need for today of paying less in taxes, but what are your needs for tomorrow? And so from there, we're gonna go ahead and take this to the end so that we can allow you all to get some questions. Here's my contact information. I'm Deshonda, Premier Taxes and Accounting. My office is out here in Snellville. You can scan the QR code to schedule a discovery call with me. I'll give you a second to scan that. I'm gonna share Kevin's as well. All right. And then this here is Kevin's contact information. Accutax Business and Financial Services. His phone number is on there. He also has a QR code to share with you all if you want to reach out to him. I'm sure either one of us can take care of you. There is a tax deadline for the S corps and the partnerships, as I have shared. If your financials are not together, still reach out to one of us so that we can file an extension on your behalf so that you will not be penalized for late filing. Filing an extension is not an extensive process, so please reach out so that you can file an extension, okay? And I'm gonna end by saying, here are both of our QR codes and our contact information together. I'm gonna end by saying, this training was a lot. It was a lot of information. This is probably about something from 5 or 6 accounting courses. So it's not something that you're gonna get one time. It's something that is supposed to strike a conversation. Like if you're coming to our event tomorrow, which I hope you all see, and there was something on here that piqued your interest, because you'll have some one-on-one time with tax professionals. Can you tell me more about? And we will be happy to share that information. So Chika, I'll turn it over to you if you want to pull a couple of questions out.
Yes. Woo-wee! Y'all killed it. This was a lot of information, and I know people were like taking notes emphatically. Luckily, we recorded it, and the chamber does share these out, so you will get this. Yeah, so we had a few questions. I wrote down some questions they had. You did answer the question about how much income I need to have an S corp or LLC. And so the business deadlines you covered. Somebody asked, is S corp or C corp better? That really depends on what you're making, right?
Yep.
And I
Depends
think
on
it's
it depends on what you're making. It depends on what your needs are for your business. It depends
right,
on what your needs are for your future. It really
right,
depends.
right. Yeah, and what I thought was crazy that I learned today because of y'all was that even though you can't get a refund after 3 years, they have 10 years to get their money from you. Wow. Wow. I mean, it makes sense, right? They're a business. But I thought that was pretty interesting. Do we got Jennifer? Do you have a question, Jennifer? A quick question?
I do have a question. Thank you for this. This is very informational. My question is regarding when you have people who work in your business that are in other countries, as far as their how you are processing that in your expenses. Should it be contract labor, or should that just be a business expense if you are just paying them monthly?
Oh, that
So
that that goes. Go ahead, Deshonda. Go ahead, Deshonda.
contract labor is a business expense and it's still contract labor. So you would still pay them out of your regular business bank account. They are still independent contractors. There's no, that's not a separate thing. So if you look at your profit and loss statement, and I'm actually doing a training here at my office. I'll put the link in, and it's called Q QuickBooks Online for DIY for entrepreneurs, where I'm gonna allow the entrepreneurs to come in with their laptops, with their QuickBooks Online account. I'm gonna walk them through some things, show them some things so that they begin to get a little understanding about what's happening in their business. But contract labor is an expense on the profit and loss, whether the person lives here in the US or another country.
Thank you. Would you have to give people in another country a 1099?
No, they're not reporting to the Internal Revenue Service.
Awesome. Thank you so much for answering my question.
Mhm.
That
Let me
was a
get
good
that
one.
link.
That was a good one. All right. Takia, is that how you say it? Takia?
Yes, yes, thank you.
Oh, yep.
Hi. This is a great presentation, and I do have a wonderful tax professional that I'm working with for this past couple of years. But I have a question because I'm paying taxes for 2019 and 2018. It was a joint file with my late ex-husband, and I have 2022 that's due, and I owe. and I do have to file an abatement. I want to file an abatement, however, it's confusing. And I'm like, I'm trying to figure out what, how to get rid of all of those taxes, because right now I can't afford to pay anything back because I'm not working full time anymore. So yeah.
So that's tax resolution, and there are quite a few possibilities. One of the possibilities, I heard you say your late ex-husband, so I would assume he is deceased.
Yes.
Um, depending on where the tax liability was between the two, you could qualify for innocent spouse or injured spouse, however the tax came. You could possibly qualify for offering compromise, depending on the tax liability owed and your income. And there may be space for penalty abatement as well. So I would encourage you to schedule some time for just a tax resolution conversation, to just get more information on how to help you.
Okay. All right. Thank you.
Yeah,
You're
so
welcome.
tomorrow we'll all have time one-on-one to sit down with some tax professionals. We'll be talking about personal and business taxes at ViStar Credit Union in Peachtree Corners. So for those who are in Georgia, or if you're flying to Georgia tomorrow, come through. We got 3 more questions. My guy Matt, the CEO of VI Capital Lending and the chairman for the Real Estate and Professional Services Committee of the ABC. What's going on, Matt? You
Hey, what's up? Great presentation. Know both you guys. I have a question about the S corp. In regards to making more money and seeing the tax benefits. I've heard, right? It takes time and you have to apply. And so, what is the likelihood of being accepted in the time frame? Like I've been an LLC for this particular company 7 years, my other company 19 years. What is the probability and time frame to apply and to be transferred over to be an S corp, if that makes sense?
It takes about it's about a 30-day process if the IRS is not moving and dragging their feet. Because once you fill out the form 2553, there's now an option where you can fax it to the IRS. So once you fax it to them, it should take them about 30 days to process it. Then they're gonna send you a letter in the mail letting you know that they approved your S corporation classification for tax purposes, and they'll let you know the date when it's effective. Also on that letter.
So is it, and the last little follow-up is, if you were to say, is it likely, or is it kind of, is it a criteria, or just do you apply and you're probably going to be approved unless you've done something wrong? I'm just curious.
Nah, it's I've never in my experience I've never seen nobody get declined. That'd have to be like some kind of extreme situation where you wouldn't get accepted. But there are explanations that you have to put on there if you file it late. Because as long as you're within the first 60 days of forming your business, your LLC, and you want to get it classified in S corporation, you consider to be on time. After 60 days, you consider to be late. So you just have to write an explanation on the form to let them know why you are filing it late, and everything go from there.
But if you're looking, say, for me, like next year, I'll be good.
So you want you so
Say
what
if
you
I were
saying?
to file and say, if I say, hey, I want to turn into an S corp for next year, that's just the normal process, right?
Yep, that's the normal
Okay.
process. So if you do it now, it's still March. So just say if you get approved by the end of March, then all of the money that you bring in from April to December can be filed on the S corporation on the 1120S, and then everything from January to March will still be on the LLC.
Nice. Good stuff. Good stuff. Miss Brundage, is that how you say it, Mrs. Brundage?
Yes, can you hear me?
Yes.
Yes.
Okay. Uh, can you see me now? Okay. My question is about I have an e-commerce business. Right now I'm selling not internationally, just in the United States. And I'm scheduled to collect taxes for any sales that happen in Georgia or by Georgia residents. And I'm just trying to make sure that I am collecting taxes properly. That's basically what I want to know about having an e-commerce business and selling across the nation or across international. Would any of you guys be able to help me with that?
Yes. Yeah, so you have different softwares that'll help you, like when you're in e-commerce and you're reporting from multiple states. And I'm sure Kevin works in this as well. Like the systems will help set you up with the states and make sure that you have the correct calculations, and working with someone to get your system set up, because this is all system driven. Everything we're talking about, y'all, is system driven, right? When you have the right systems in place and the person who understands the system and the process and the rules and regulations, you can definitely do it and become more efficient. And I'm sure whether it's me or Kevin can help you in that area.
Okay.
Yeah. And they'll both be at ViStar Credit Union in Peachtree Corners tomorrow evening. So come through. All right.
Yeah, I'm gonna try.
Um,
I'm gonna try. I got a child. I got
okay,
a young.
bring the kid, bring the kid. It's family friendly. Bring the child. It's okay.
Okay.
No,
Thanks.
we got no excuses. We gotta get our money right.
Well, you're right about that.
All right.
Bring the child. I
Bring the
took my
child.
baby
Child
everywhere.
children,
Now she works for the top asset management company in the world because she's been around business her whole life. So bring the
children
baby.
need to learn. Children need to be in the environment talking money and business and wealth and life insurance and real estate and entrepreneurship. I promise you, they will benefit and they will thank you later for dragging them to this event tomorrow night. All right. We
Okay.
got a question by Andrea or Andrea.
Yes, it's Andrea. I have a question for a friend. She is a hairstylist and she rents out the booths to others. Does she have to give them a 1099, or how does that work?
Now, the booth runner is just an expense for them. Now, if she paying them, if they all working under her in the shop, and she collect all the money, she pays them, then they'll get a 1099. As far as that, before as the booth runner, that's just an expense that they have. They
Okay.
they need to keep up with the booth runner that they paying to her, and then also the booth runner for her. That's like income that she collecting from them too. So she got to add that to her income as well.
Okay.
But she doesn't. So she doesn't have to issue them a statement.
Supposed to be
I think
issuing her a statement if they pay more than $600.
So if they're 1099, which they should be, right?
Yeah,
And
but
they
it's
pay the salon owner more than 600 for the year, they should issue her a statement.
They're not a 1099. They are a customer for her. They are her customers. They pay her.
no.
Booth
He not
expense
talking about.
is expense for them.
Yeah, it's an expense for them.
It's an expense for them. It's not her
Right.
expense, it's their expense.
Right. So she's not issuing them a statement at the end of the year as the owner.
They
No.
don't work for her. She just
Right.
rent out space. She's their landlord.
Right. Right.
Exactly.
That's my point. That's my point. So she doesn't owe them a statement, Andrea. And you and your friend, tell her to come tomorrow too. All right. Any more questions? Are there any more questions? Let me just check the chat real quick. I know Kevin and Deshaun have been answering the questions in the chat. Tomorrow, yes, we got the flyer for tomorrow. Everybody, the link is in the chat to show up for the event tomorrow. Come through, come learn something, and then come meet some new people, right? Why not? Let's see. No other questions. Man, this was a lot, and we really, 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 truly appreciate y'all, Kevin and Dr. Deshonda for dropping so many gems today. Listen up tomorrow, everyone. We have our event at ViStar Credit Union. Shouts out to our sponsors, ViStar Credit Union and Breezeway Garbage Disposal. They will be there tomorrow. Financial Literacy Month is coming up in like 18 days. So as the Financial Services Committee, aka the Money Team, we have you covered. So next month, our webinar, we got some special guests for you on our second Wednesday webinar next month. And then we'll have the information for our Money Smart Business Summit that will be happening on April 26th. That's a Saturday. Put that in your calendars right now. You heard it here first. One time for our leadership, our president and CEO, MC the MC is what I call him, the best dressed man in Georgia. We appreciate you all for showing up. We hope this helped. We hope you got something out of it. And we appreciate you. And we will see you all tomorrow evening at ViStar Credit Union in Peachtree Corners. Thank you, thank you, thank you.
Bye-bye, thank you.
Great job, y'all.
Thank y'all for your time.
I'm gonna share my screen with the contact information on the end for anybody who wants to get it.
And when will the recording be available?
That is a great question. And just so everyone understands how we operate, the recording will be available on our Facebook. So anybody can go and watch it. We don't say, okay, we're going to send it to everybody. We make it available on social media and you can go and watch it and it will always be there. So
Join the
that
chamber. Join
takes
our
about
Facebook group.
that. This one is going to be public. This one is going to be public. Not
This
all
is
of them are.
huge.
Yeah,
This is amazing. This was amazing information. Thank you all for joining, and we will see y'all tomorrow evening.
a great session. Thank you, Dr. Lucas. Thank you, Kevin. Obviously, it's tax season, and this is the type of information that everybody is like, hey, I need it now. So great job. This is what we do for the community.
Right.
All right, everybody.